really headed on the markets from here. Vikas Khemani, founder at Carnelian Capital Advisors, joins us for exactly that. Vivek, thanks a lot for joining us. We have been talking about these all-time high kinds of levels because the Sensex did hit that record high level earlier in the day as well. But it seems like on the Nifty, we've been evading that a bit. It is playing a tease. Tell us, where do you think things could be headed from here? Because the banks have really been the sour point and they've not been participating in this move at all. Do you think we should expect that to change in the near future?
I think Indian market, whenever market gets closer to all-time high, it's bound to consolidate around that level, and especially when it has come out of such a skepticism kind of mindset in the markets over the last couple of months. But fact of the matter is that I think earning growths are fairly solid across banking, automobiles, IT, and capital goods, telecom. Pretty much most of the sectors have been reporting very robust earning growth, as well as I think liquidity situation has changed as the interest rates are kind of peaking out. And as interest rate changes, we all know that the liquidity towards emerging markets will come back. India will definitely receive disproportionately large flow of that money, and that drives the market in short term. So, we've been seeing fairly large activity in the market. As you see the exchange of blocks, suddenly there's a lot of activity of the blocks in the market. So I think there is a bit of a change of money and happens around the all-time high level of market when the previous resistance level comes. But these are all technical factors. The fact of the matter is that India is one of the best phase of growth. India is, from all perspective, whether it is macroeconomic environment, microeconomic environment, the corporate profitability, corporate balance sheets, sovereign balance sheet. Everywhere, I think India stands out and is very solid. The sustainability of growth is, likely to be here for next, 3 to 5 years. So if that's the kind of environment, you will see liquidity remaining fairly robust, and that will drive the market from here also. Now, whether it remains here for 1 week, 2 weeks, 1 month, doesn't matter. For long-term investors like ourselves, we care for the direction, we care for the amount of money which can be made over a long period of time, and I think India remains one of the most promising place to create wealth.
Okay, Vikas, hi, always great having you on our shows to chat. I was going through some of the recent newsletters and the notes that you folks put out at Carnelian. I know that you've been quite a big bull when it comes to manufacturing in India. And I believe there was, in one of your recent visits, you visited a company which makes, I think, either railway wagons or coaches, basically, something to do with railways. So tell us, is that one sort of element with which you're playing manufacturing? Are there others? How do you crystallize this down to stock ideas?
I think so. One of the first very good question. I think we've been seeing a very big change in the demand environment, and the letter which you're referring to, where we said demand creates supply. Basically, historically, a lot of people have been non-believers in manufacturing. People have said that India can't create scale, India can't build, efficient players, India is not good in R&D. Those kind of skepticism comes around, and we've been big believers that as long as there's a demand, Indian entrepreneurs are very smart, Indian engineers are smart, we have great talent pool, and which will rise up to the occasion and create the best quality in the world. And that is what this note was referring to, that, if there's a demand, Indian entrepreneurs will create world-scale capacity, world-scale quality, and which they've been displaying industry by industry. The metro coaches was just one example, but there are many more where I'm seeing companies are looking to get rid of the historical mindset and build global scale capacity, global scale organizations, not only to cater to the demand of Indian markets, but also to cater to the exports. And this is happening in the high-tech sector. It is not limited to only the conventional, the only labor arbitrage kind of thing. So this change of mindset, you will see more and more reflecting as the time passes. We've been believing this theme for last over 2.5 years. Our strategy, which we launched around this in October 2020, has been one of the best performing strategy. And the idea is to first look at a sector where India holds a big tailwind, whether it is auto component, chemical, specialty chemical, garmenting, capital goods, or for that matter, toy manufacturing. And it's very, very wide sector where, either there's import substitution happening or there's export orientation. Combination of this, we have a massive, opportunity profile ahead of us. It is pretty much similar to what it was there in IT in mid-90s. So I see no different, and this is a decadal opportunity. So idea, and there are many opportunities. It's very wide. So we remain very, very positive on that.
Okay, Vikas, got that. So the follow-up question is that are you getting these stocks at prices that you like? Because as these opportunities are being discovered by the market, I mean, look at what's happened to stocks like HAL or some of these other Astra Micro on the defense manufacturing side, or even in HBL Power Systems. I mean, stocks that are very niche and they provide very niche manufacturing solutions. Is the price still enticing?
So again, look, there will be some sort of euphoria in certain pockets. There will no doubt on that markets. See, the thing is that initially there are very limited number of companies. So more and more people chase those kind of limited number of companies, and then euphoria or valuation gets built. Our approach is to remain sane, to sort of we definitely like business management, but also we are very valuation conscious organization. So if something is not making sense from a risk reward point of view, we walk away. We are finding right now ideas where we can comfortably say that they can deliver 20 to 25% kind of earning growth over 5-year period. And moment you see that, and at a reasonable valuation, we are getting lots of ideas around that. And also you have to see many companies are scaling up in a significant way. So you have to also have a bit of belief in the management that's where you have to have the trust and fact that these managements can deliver. So again, markets are forward looking, right? So you have to sort of assess that what that can happen, going forward. So we are finding good ideas, good companies, in the space.
Okay, Vikas, would these be concentrated in some pockets, the fresh ideas that you are talking about? If you could at least take us through that. And also you said that, there are some pockets where perhaps valuations are just too high, so it doesn't make sense right now. What are the pockets that you would avoid purely based on valuations right now, even if, the space is looking good?
Sure. So I think this whole manufacturing space cuts across very large, wide variety of sectors. It is there in auto component, chemicals, specialty chemicals, garmenting, capital goods, consumer electronics, footwear manufacturing, defense, of course, and many more. And across the board, there are so many ideas, right? One sector where we feel a little bit of over enthusiasm is there right now around defense. Of course, defense is a very large opportunity, but if you are paying 100p or 80p for those kind of companies, in my opinion, makes no sense unless you are very sure about the potential opportunity of over next sort of 5 years, 10 years, and to that extent you are able to put up with that kind of scale up at a later date. But so one has to be very careful, about identifying ideas. I have no doubt that they will play. Many of the companies will play out, but also I have no doubt that many of the companies will fall on the wayside. Like we have seen in every sector, in IT, every company did not become big. In pharma, every company did not become big. In construction, many companies don't even exist around. In new tech sector, we don't have many companies that are kind of not even being talked about now, which were kind of the hot companies. So one has to be very mindful of the business model, management quality, and of course valuation before any high promising sector you jump into.
All right. Okay. Wise words and advice perhaps worth keeping in mind. Thanks very much, Vikas, for joining in and giving us your perspective on the market. We do have to take a quick break on that note. On the other